Hello and welcome to another episode of All Things Money. I'm your host Fatima Attarwala. My guest today is Faisal Mamsa. He's the CEO of Tresmark. Tresmark is a financial information terminal in the fintech industry. Hello, sir. Welcome to the show.
Assalamu alaikum everyone. Great to be here.
So, a few days ago, we had this interesting discussion. I was in the midst of writing an article about how we have to return the UE loan, we have the of 3.5 billion, we have the Eurobond of 1.25 billion, I think, that we had to return, and the pressure it would put on the exchange rate. Now, I had people like Hafiz Pasha and Kaisar Bengali going, rupees 320, maybe more than that. And then I had a conversation with you, and you were like, you know what, till June, you don't really see much of a depreciation, which is contrary to popular perception. So I wanted to have this conversation to understand, why do you think that the rupee will remain around the 280 mark till June?
So it's a very interesting thing that you bring up, because we talk about currency, we talk about dollar rupee or just rupee, but we don't estimate how close it is to our life. If dollar goes up, then everything becomes expensive. Your fuel gets expensive, and consequently everything gets expensive. So it is really close to everyone's heart. I'm sure a lot of people have invested also in gold and dollar, which is obviously dollar denominated, and so everyone is very interested. So it's a very interesting thing. I mean, I get calls from a lot of people, and they talk about is the dollar going towards 300, and when I tell them no, they're very put down by it, because so that's the truth. So when you were talking about whether rupee will actually get devalued, I think what we have to understand is we have to understand the history of rupee. I'm going to go into a little bit of details, but over the past few decades, whenever there was a balance of payment crisis, what usually happened was that the central bank or the government would throw reserves into the market to stabilize the rupee, and as a result, your reserves would go down, and the demand would always be there, because there was speculative buying, there was trade buying, everything was there. So you could not equalize that kind of a demand. So this time things are different. I mean, we saw, and the last episode was pretty ruthless, of where rupee went from 180 to 300. And we didn't really see any positive coming out of it. We didn't see like exports going up or imports compressing. So I think we need to ask whether devaluing the rupee is the answer to any solution, an economic solution. But coming back to your topic, so what is the new policy, what is the new paradigm shift that the central bank is doing? Right now, what the central bank is doing is that it compresses the demand. How does it do it? It just tries to make imports more difficult. So it will increase interest rates, it will increase LC margins, it will maybe tell banks that some sectors are not allowed, like automobiles or something similar. So when the demand is like squeezed, so your net reserves, your net flows are more or less balanced. So that's the crux of it, and I'm just going to go into a little bit more detail about what the flow position is as of today. So you've been hearing that State Bank is buying dollars from the interbank market. So when you're buying dollars, it means that there is an inflow and there is an outflow, and since there is a surplus, so the State Bank is mopping that out. It's taking that out.
So if the surplus was not mopped up, the rupee would have appreciated before the war.
Absolutely. You see, it's a very small market. I mean, we think the whole dollar book is about 100 billion. You take your import exports and you take your remittances and some FDIs, roughly about that. But there are only 12 to 15 banks which are dealing in this. So suppose I have I'm a bank and I'm surplus by, let's say, $20 million, and I need to sell it, so I will sell it to you. But you are already, you already are saturated, so you also want to sell it to somebody else.
So the State Bank is buying that.
So if that surplus is not mopped out, it's not sucked out, I will keep this will keep going on in those 12 banks till the rupee comes to what, maybe 260. I mean, just fictitious. So we have to manage that.
Even
Similar
in
thing.
fictitious
Yes.
terms, for the limits of data economics that we always talk about, is always about keeping the exchange rate constant. Now you have to sell reserves for that, whatever it takes, because for the average person, the exchange rate matters a lot.
Absolutely.
This is what they think. If the rupee is devaluating, if the rupee is depreciating, if the dollar is more expensive, we are getting poorer, which is true.
Absolutely.
In dollar terms, our salaries are going down, and we are an import-reliant country. So why not let the rupee become stronger?
So you have to be realistic as well, and I think the biggest thing is when you look at interest rate differentials or inflation differentials. So let's say if the interest rate in dollars is 4%, and or inflation is 4%, and your inflation is maybe 20%. So then there is an obvious equation where you would want to hold dollars, because you don't want because when there is a 20% inflation, your value is coming down. So we call that the inflation drift. That inflation drift is real, and we have to accommodate to at least that extent. So if you look at the history of rupees, we look at about 6 to 6.5% devaluation on average. Lately, it has been more because of that outlier of 180 to 300. But yeah, so that is that. So right today, interest rates, 10-year T-bill is around 4.4%, or 10-year PIB is about 12.5%. So an approximate devaluation of 6 to 8% is realistic. It should happen. Otherwise, there will be a lot of arbitrage.
Could there also be pressure from the exporters? Because ever since I've been in this industry, there's always been calls from the exporters that look at India's exchange rate, and Indian rupee did depreciate, that we are no longer being competitive because our rivals are depreciating their currency and our currency has become too strong, so our exports are not increasing. Now, this is not particularly an argument I agree, because no matter how much our rupee depreciates, the quantum of exports have not increased significantly for us to justify their depreciation. Having said that, if the rupee was to get stronger, would it have had a negative effect on our exports? Especially given that US is one of our main markets, there's these across the board tariffs, 10% that Trump did impose. So if our exports would have become more expensive, then perhaps we would have lost a share of our EU market or our US market.
So I think exports is the backbone of every economy. I mean, there's no two ways about it, and the concerns by the exports are also very valid. Unfortunately, our exports haven't grown. I think if we look at the last 25 years, let's say from year 2000 to maybe 2025, we were at par with Vietnam, we were at par with Thailand, and those economies are doing exports of around 200 billion right now, when we are doing 34 billion. So obviously exports has underperformed. Has it been because of just because of the currency rate? I don't think that's the answer. I think when you talk about exporters, I think they do get a windfall. They exported something at a costing of, let's say, 280, and then if dollar goes up to 300, so they get a 20 rupee windfall. But that's just one time. Two things are very important in this equation: that most exporters import things as well. And the other things is, so there is, that is in itself, self equating. The other thing is that when a devaluation happens, the buyers start negotiating. They said, oh, you got a windfall, now you need to give me a part of that. So end of the day, it's a net zero game. Having said that, what does help exporters would be if we rationalize our various policies. I mean, our energy costs are outrageous, our utilities, so those are the things that we need to, how can we open up markets? Some things will obviously be dependent on the currency. For example, your agri exports are over there. But for most of the things, we need to go into value addition. How can we upsell what we are already selling? There is an obvious relationship of how the Pakistani rupee and the Indian rupee are related. If the Indian rupee does get devalued or depreciated, it does impact Pakistan. But how much did India get impacted when we went from 180 to 300? So we, at one point, I remember, if I remember correctly, that we were, rupee was stronger than the Indian rupee, and today that is at 90 and we are at 280. So I think that, that debate does not really hold.
No, I agree. I think we do tend to compare ourselves to India a lot, but that Indian export makeup has changed so much. The Indian economy has changed so much that I don't think we can fairly have that comparison anymore. But keeping the old arguments, the export sector has always said energy, tariffs, subsidies, export financing, interest. I mean, these are arguments that I think at least I have been hearing for the last decade and a half. So the old horses and all that. But coming back to what's happening right now, we will probably have the UE loan repayment. Then we have returned the Eurobond at the time of the shooting. Then there is, even if the ceasefire holds, the oil prices are above 90 right now from the pre-war levels of around 70. Then Mohammed Aurangzeb, the finance minister, said the remittances are not affected as yet, but going forward they might be affected. So all of this could put pressure on the exchange. Now you had that calculation about oil prices increasing from $100 to $110 and how that would affect our oil imports. If you could just walk us through that.
Yeah, so I'll break this down into two things. One is the unexpected outflow to the UAE government. I'm saying it's unexpected because yes, there was over the last 2-3 rollovers, there was increased pressure on shorter. So I mean, there was something going on.
Something going on. They weren't giving us the rollover as easily as they did in the past.
Absolutely.
And even the extension was like a month, 2 months. It wasn't like that in the past. It's something.
That's
even before the war, something was going on.
Absolutely. So when we talk about 3.5 billion, it's not a small amount. It is difficult to say that okay, we'll give it and nothing will happen. It's not like that. I mean, but yes, the government did know that something was coming up for the last 2-3 months, and I'm sure that they have factored in when they agreed to certain dates. In our opinion, what the market thinks is that right now this will be paid from reserves until we replenish from some other sources. I think the ministry is already working on a lot of different sources of external finance. I think when we discussed things with them, right now the concept is not about cheaper loans, it's about sustainable loans. So we are talking about panda bonds, we're talking about green bonds, we're talking about diversifying the investor profile, and so a lot of things are going on over there.
And even for panda bonds, we've been talking about panda bonds for quite some time. First was $1 billion panda bond, and then came down to 300 million panda bond. So Pakistan's ability to raise funds in the international market has also gotten squeezed of late.
Absolutely. I mean, over the last few months, and especially over the last few weeks, things have gone worse. Our credit default swap, which is kind of an insurance for a country, has gone up by about 200 bips. Our Eurobonds,
which are basis points.
Yeah. So about 2 percentage points. Eurobonds trading in the international markets have also gone up equally. So whenever there is crisis, emerging economies do get hit. Whenever T-bills in the US go up, the whole world gets shaken. So this is why we're looking at dollar strength, we're looking at turbulence in gold, in euro, and everything. So we are equally impacted. Having said this, I think there is still, there's very fruitful discussions on panda bonds. Maybe this is obviously not a right time to do it immediately, but I think we will be seeing some issuance in the next 3 to 6 months. So this is part one of your question.
Yeah,
where
even if we do 3.5 billion, it's a huge amount.
That's right.
So even if we have like 300 million worth of panda bonds, the gap to, so we have 300 million of panda bonds, we have 300 million of, say, hypothetically green bonds. Again, 3.5 billion. Would this outflow affect our relationship with the IMF? We have a staff level agreement, but would it affect whether we get the next tranche or not?
I think this is something that is under the radar of IMF. I think they are aware of this development. If I were to just maybe summarize it, we have about 5 billion of outflows in this month, which is huge by any standards. And we will be getting an inflow of about 1.2 billion from IMF next month. Still, we have an outflow of 3.4 billion, and if we have a reserve of 16 billion, so I think there is some space that we can actually give out. I think the State Bank will also be managing it, so they will be doing some buy-sell swaps with banks, which would be to tap into the dollars held by private banks. So yes, it is difficult, but it will be managed.
I think I would just like to take a beat to appreciate this stabilization process. I think there's so many podcasts right now that are very, very negative and very, very alarmist. I was just thinking 2023 is not that far ago, and our reserves were down to around 2 billion. And right now we face a 5 billion outflow in 1 month, and yet we think it is manageable. So I think the last few years, as painful as the stabilization process has been, at least we're at this point that returning a loan does not lead us to the doorstep of default.
Yes, I think we may not see it, but there are two things that actually worked very well for us. One is the obvious elephant in the room, which is remittances.
I think we have to thank FATF for that. If we had not gone on the FATF grey list, if there was not so much pressure, all the hundi hawala would still have been happening. And we always had these remittances, it's just not through the formal channels.
Yes, and I think there's still more room over
there.
There
is more room, definitely.
So maybe we might
maybe
see higher numbers.
Maybe they will squeeze it over there.
Yes. And if you also remember that during the COVID times, I think the State Bank came up with a very innovative strategy of RDA, the Roshan Digital.
Roshan Digital.
So we have a lot of, not a lot, but a substantial amount of dollars coming over there as well, which is sustainable. It's sticky. It's not like phone kiya and mujhe wapas chahiye.
Yeah.
So
we criticize remittances and all of that we should not, and we should definitely not be dependent on them. But yes, if you have family back home, you'll figure out a way to spend money rather than return a loan because.
And we're not the only country. I think the highest remittance is from India, but other economies like Bangladesh, Egypt has 41 billion in remittances. So
percentage they also Egypt has tourism and the pyramids and all. So the problem is not how high our remittance, the percentage of GDP is very high.
Yes, absolutely. And yes, so these two things have happened, but yes, there is obviously, we talk about reforms, which, you correctly mentioned what industries, what areas can be actually, nurtured. There's a tax discrepancy which everyone talks about. So, those are the things that those reforms need to be taken. So that's one part. I think the other thing is that we are very active in managing our risks. I don't know if our audience realize, but there is no change in the policy rate. So it's still 10.5%. We spoke about the monetary policy coming on the 27th. But in the secondary market, interest rates have already gone up by 200 bips. So whether there is an announcement that interest rates will go up, there's already in the secondary market interest rates have gone up. This was very important because when you talk about stabilizing rupee, so it's about what am I getting? So people, especially the international investors, they take bonds, and if they're getting a higher interest rate, they will keep purchasing it, or they will maybe not sell it. So that was important to stabilize your what we call hot money, because that comes into bonds that can be taken out immediately. So we needed to stabilize that. So the interest rates have gone up by 200 basis points. In spite of that, about 450 million have already left Pakistan. Fortunately or unfortunately, we didn't have a big inventory. So we had about just 1.2 billion. So even agar ज़्यादा भी निकल जाएगा, so it won't really hurt us. So this was the the equation about relationship of interest rates with that.
So hot money is the money that flows into whichever country has higher interest rates to get short-term gains. When with all the war that is happening, over $400 million of hot money has flown out of Pakistan. And because the secondary market, we have 2 percentage points, that is 200 basis points higher, less hot money has flown on than it would have otherwise. But even then, hot money, a higher interest rate enables hot money, and because we have 10.5%, but then we also remained at 10.5% because we had the room, the cushion to bring it down in the earlier MPC meetings, and we didn't. So, which is why we didn't have to increase the interest rate. There have been rumors in the market repeatedly that the interest rate is about to go up, and perhaps if the ceasefire does not hold, I think the interest rate will have to go up so that there is demand destruction necessary to compress imports.
Yeah, absolutely. I think you've chosen the right word of demand destruction, because the economy has to slow down.
Which is very sad. Our economy was not speeding up in the first place.
In the first place, yes. Yeah. You're right. So interestingly, when you do talk about hot money, just to complete that loop, countries like Egypt have interest rates of about 20%. They have a hot money portfolio of about 5 billion. So when the hot money left over there, so they had to depreciate their currency from 47 to 52, which is significant. Luckily, we had a little bit of luxury, which is unique. So that was good. But when we spoke about why there was no emergent monetary policy, I think there were two key factors: that the data was not available. So when the March data came, it was still very subtle. It was like going up from 7% to 7.3%. So, the
Ramzan effect really supported it.
Yeah, and so the real interest rates are still in positive territory. We're about 3%, still in real positive real interest rates.
This is why there's been a lot of call that we need to rationalize that as well.
Well, given that we have a weak financial infrastructure, I think a little bit of high interest rates won't hurt us. I understand that there are the business community is very choosy about how interest rates go, but the State Bank does have a few. They have some programs where you can actually get subsidized interest rates. So between today and the 27th, which will be it's about what 18 days, I think there's still a lot of things can happen. So we still don't know how this this conflict settles down. So I think if we talk about status quo, जो आज है तो वही उस वक्त होगा, so then we are definitely going to see interest rates go up by about at least what I feel is 200%, 200 basis.
200 basis points.
Yes.
That's a steep jump. I was expecting more like 100 basis points perhaps. But say the ceasefire holds and we see immediately, I think the oil prices went down by 15%. Say the ceasefire holds and it seems that this is durable and oil prices trend down further. Do you think there will still be an MPC rate, an interest rate hike?
I think the State Bank would want, or the MPC would want to have a prudent policy. I think they would want to make a decision which is proactive rather than reactive. And what the market is saying, that although even if ceasefire happens, everything becomes normal, there has been a shift in risk, how we perceive risk, how we quantify a value to that risk. So the risk has gone up. I think supply lines will take long to come back to normal. So in that sense, I think the MPC will be more prudent. I think they will want to err on the side of caution, and they would at least hike rates by at least 1%.
By at least 1%. So if I were to sum up the discussion till now, there has not been pressure on the rupee as yet to depreciate because we had that room. We had excess dollars in the market, which the State Bank mocked up to keep the exchange rate stabilized. Because of that cushion, right now we have not seen the rupee depreciate the way we did post the Russia-Ukraine crisis. Because that was an energy crisis. This is an energy crisis. That energy crisis nearly took us to default. This energy crisis, even with the outflow of almost 5 billion in 1 month, we are still stable. So this is positive, good for us, pat on the back for us, bigger pat on the back for preventing a potential World War III and nuclear scenario. But coming back to the financial markets,
I would want to add something over here before you
please.
go. So I think, historically, we talk about rupee being, opened up, and it should be a free market and everything. But I think rupee, is it, people say it's being managed, it's being, it's artificial. But I think, there has been a regime shift. I think rupee is now a policy decision. I think that's very important, that it's now a part of your policy, because the moment you devalue your currency, it impacts your inflation, which impacts everything else, and it's also become a leading optic indicator. So whenever rupee devalues, everyone rushes to buy dollars. There's a lot of speculation, there's a lot of rumors, it creates a lot of uncertainty. So I think the currency is now a policy factor now.
Hasn't it unofficially been a policy factor for some time now, if not decades? Is this entire period of DAR and PMLN?
Yes.
I
think the method of
was kept constant,
managing,
even when it should not have been.
Yes. So there is managing. We are managing, and the whole, in every country, currency is managed. I mean, you look at first world countries like Japan, they do intervention, both verbal as well as physical. India, every country does, if just to bring in that stability. So even rupee is managed. I think the method of managing it has changed from going from burning reserves to manage your rupee to compressing demand. So that's the change that has happened.
Burning reserves, you have open market operations to sell or buy dollars to manage the rupee. Now you're saying that we are using managing demand. So again, when we talk about managing demand, that is imports. Now, so many of our inputs are imported, that when we say we are managing demand, we are saying we're managing manufacturing. And when we manage manufacturing and industry, we are managing employment. And then again, that hits the common man. So yes, perhaps on a macro level, this is a better tool. But if I were to look at the common man's life, in the short term, it does create issues.
I completely agree with you. I mean, for us, for an economy which has a population of about 250 million, we should only be thinking about growth. I mean, we should be touching double figures. Unfortunately, we haven't come to that position where we are saying, that okay, now I have my house is right, now I will look at growth. We haven't come to that position. I hope we do come to that position very quickly. In terms of how does the central bank micromanage imports, I don't think it does that. I think it has just delegated that monitoring to banks, where it says that okay, you have to manage your own outflows and inflows. So the bank at its end would probably say, okay, if I spend this $2 on this import, I'm actually getting $5, so I'll do it. But if I'm just spending these $2 and I'm not getting anything, it will probably not prioritize that. So that is happening at the base level.
So there was this period that when the LCs were not opening, and there was this whole thing that you need to be able to export and bring in dollars to be able to import, and so there were a lot of. So I was talking to the CEO of Pakistan Cables, like that was a challenge, because we need to import, but we do not export. We make cables for the domestic market. So in that case, I think the effect on a lot of multinational MNCs, in which their profit repatriation, their LCs as well, I think that did lead to a certain amount of exits that we saw. So yes, this is a different methodology, but it has its very strong downsides.
Absolutely. I think everyone realizes that this is not the ideal thing. But if you are managing a situation, you're looking at the
rock in a hard place.
Absolutely, and you're looking at the quickest way with the least impact, and probably this was the one rather than defending the rupee and burning reserves or letting it devalue by double digits. Yeah.
Yes, this is more stabilization. That is more band-aid, short-term measures. This is more medium-term. So I do agree that it had to be done. Unfortunately, the stabilization phase that we were hoping to end soon, maybe in the 6 months or maybe 12 months, 18 months, that will probably drag longer, I think, because of the war. But on a different tangent, I mean.
And I do believe that what the steps taken to actually have this long-term stabilization impact, that's still missing. I think that's the area that we really need to focus. What will take our exports from 30 odd billion to 60 billion? What skills will be required by our population in the next 10 years? These are things that we're not talking about. These are important things. What will be the job market like after AI comes in, and what will we be really exporting, because the market will have changed. So I think those are the questions that we're not talking about. Those are the reforms that we talk about, which are really urgently needed. So I hope we step out of this survival mode and have this long-term prospecting.
Yes, old arguments: huge population, demographic bulge, demographic burden, demographic dividend remains to be seen. I mean, unskilled labor force, education, literacy, health, nutrition, population growth. I mean, these are conversations we've been having over and over again, but each government comes and has to stabilize the economy, and then there is a different government and they are back to stabilizing the economy. I don't think growth is something that can take place within the IMF. And the time that we are not in the IMF program, we burn through whatever process we are burning through, and we end up in the IMF program again, the boom bust cycle. So I no longer see a way out. Even the reforms that are being taken place, like PIA privatizations, as important as it is, and we have Arif Habib going on TV saying that this might not be stable because of the war. So on that path, on that note, I don't really see a way forward at the moment. But if I were to take a different tangent, you head a financial platform. Over the last, and you're B2B, right? So over the last 5 years, what has changed in terms of investment? Because when the stock market boomed, there was a lot of pundits who were saying, oh, this is just the stock. The real estate market has come down, so that money has flowed into the PSX. And once those controls, because we're under IMF and there's more scrutiny for the real estate market, once those controls loosen up a little bit, the PSX money will again flow into real estate. We have gold, we have real estate, we have the stock market, and now we have the new player crypto. So in the last 5 years, what changes have you seen? And once crypto is regulated properly, like under the SECP or Ministry of Finance, whatever framework it has, what changes will come then?
Yeah, so I'll just describe what we actually do. So we are a fintech. So people log in and they can see everything financial. We have all the asset classes, whether they're currencies, bonds, equities, commodities, because commodities are a very important part of the business components. And yes, we are B2B, so we speak to a lot of exporters, importers. Lately, like for example, we also have a lot of interest on interest rate swaps. I think that is something that is not very known, where people fix their interest rate so that in times like this they can actually hedge their exposure.
Jazzworld did it with UBL.
and grow as well. So yes, we are B2B, and we do see
Which is very wise, because at that time we were in a falling interest rate market. So for them to fix it, it was very foresighted of them.
Yeah, I think just to add on that, I think a lot of people ask me that, okay, what if there is a ceasefire, there's no change in interest rates, then those guys, the corporates, will still be out of money. And I said, the objective of hedging is not for profit maximization, it is to limit your downside. So whether you're in the money or out the money, it's like your insurance cost. So I'm stable. If interest rates, God forbid, go to 25%, I'll still be paying whatever I'm paying, that fixed cost. So that's the rationale. So yes, we do advise a lot of B2B clients. Everybody comes on our system to look at rates. Yes, there has been a lot of interest. There has been, of course, the money supply has grown. If you look at M2, money supply has grown. So where does all that new money go into? I mean, the last few years for real estate haven't been so good, and when the interest rates were coming down, there were a lot of funds and a lot of investors who were, changing their fixed income book to the equity book. Because if interest rates are going down, then why should I just keep it in fixed income? So that was the whole transition, which actually took the market to where it is. Today, how does it look like today? I think with this new interest rate scenario, where we're talking about a hike of 200 bips, there is again some reverse transitioning happening, especially on the organized sector, which is mutual funds, who are early drivers of this transition. So the last few weeks that you've seen that markets has been coming down is one of the primary reasons is that. What would happen if interest rates are the same? I think globally there will be a hit in GDP, and we don't know how much the input costs will go up, how much inflation will go, how much demand will it hurt globally, because everything is we talk about industries and exports and everything. So I think that's the the blind area which investors are looking at. Okay, because if valuations will go down, then I may not want to buy equities at the moment. I would be rather safer in fixed income. So those are the questions that they're asking. Having said this, I think our corporate sector has grown pretty rapidly over the last few years. I think there's still a lot of room. There's a lot of innovation happening, which is in clean energy. It's in different segments. So if there are prudent investors and they take a look on what has a better forward-looking valuation, I think there's a lot of charm still in the stock market, but people will be balancing it between fixed income and equities.
So there has been wave of influencers and young, new, fresh pundits of Pakistan's stock market who have been saying, invest in stocks, who have actually never seen the stock market slump. I haven't seen how long the equities can get depressed. So for them, the market is not driven by what the mutual funds is doing. It's not driven by what the institutions are doing, even though that is the reality of that market. So over the last year or so, a lot more retail investors have come into the market. What do you think is going to happen to that flow of investment if the stock market remains depressed? Because if the interest rates go up, as you said, the mutual funds will be, and the companies will be going back towards fixed income. So what do you see happening there?
So I think the younger generation which is trading has actually may not have seen this in the equity markets, but they've definitely seen it in cryptos. They've definitely seen it in gold. I think a lot of investment has also gone into gold. I think there has been a bull run which started at 1600 if we talk about COVID, and we saw it peak at around $5,300. But we've also seen those gold as an asset collapse multiple times, as recently as now, when the war started as well. So they are pretty aware of market volatility. I think they are also aware of how to set up stop losses and all the new technical jargon. Having said this, I think there is some disappointment, I would say, because we don't have a very deep market. If I want to sell a large position, the liquidity is very thin, and I may be not getting that kind of price which I would get in the international market. I think there is some there's some defects in how quickly our systems are developed, the UI, the UX, they're disappointed with that as well, because they may be trading on Binance, and you know, they like the look and feel of it, and then when they come on some local equity app and they're saying, yeah, I don't know how to do this. So those are the things that which are doable. Having said that, you know, the new generation has a wider you know, vector of things that are going on. So they invest in cryptos, they will invest in gold. Gold, I mean, we've also said that we feel that gold is a really good investment for the long term. We know that, you know, that there is the production is less than the demand. So over long term, we believe that gold will go up. But gold is also, you know, when there's a crisis and you want money, it's the first thing that is sold. So that's what's happening right now. Central banks are selling it because they want to, you know, have cash. Individual, if I'm invested and I have a margin call, the first thing I will think is, okay, let me sell gold, get that money, and, you know, cover that margin call. So that's one way gold does get hurt, but it's still, you know, as a long-term investment, I think it's still a brilliant thing. Anything, if you know, if you want to buy it, I think these are good prices if you have a long-term view. So that's about gold. And you also spoke about cryptos. So I think, you know, gold and cryptos behave more or less the same. They're an alternate asset to dollar and you know, other currencies. But you know, right now cryptos is not being backed by, you know, there are times when, you know, some influential people will be talking about cryptos, and that's when it goes up. I mean, when I talk about influential people, I'm talking about, you know, large government people. So
that is already happening.
That has gone down a bit.
That, I mean, we had the whole American team come in, and the World Liberty Financial, which is Trump's crypto, Trump family's crypto coins, them coming in, and then there's this huge drive towards crypto, and then we had this entire what amounts to a ministry spring up and go through the regulation process at the speed of a train. So it's good that it's happening, because crypto adoption in Pakistan is very high. It's one of the highest, you know, at grassroots level. So we do need to have it regulated. But once, if and when it is regulated, do you see crypto becoming part of, say, a mutual fund portfolio?
I think
in a world where it's completely legal and regulated.
I think that's a very difficult to call out at the moment, because crypto is, you know, people are questioning it, you know, globally as well. Okay, whether
people are, and then you have institutions like BlackRock that have doubled down on crypto as well. So there's both, especially since Trump came to power and there were some super PACs behind him to push crypto through.
Yeah. But the scope of cryptos has also grown, you know, from having just, let's say, Bitcoin or some cryptocurrencies to having actual B2B use cases like in stable coins and, you know, other alternate coins. So I think the market will be driven by use cases rather than just by the name. And you know, what we feel is that stable coins will definitely be the outlier. It will grow by and far the most compared to other categories in this area.
So in this, let's have a hypothetical scenario. We have countries like Iran that have been under US sanctions, and we have other countries, North Korea, a lot of sanctions. So if there is a flourishing stablecoin ecosystem globally, it's a lot easier for countries to circumvent the global financial system. So in that case, there would be a very strong use case for stablecoins. Do you see that happening, especially given the current conflict?
So, you know, I mean, what you just said, okay, that a lot of people are already invested in cryptos when there was no regulation, when it was not allowed, it was not permitted. People still did it. So you know, I just remember one instance, and it sticks to my mind because whenever I think about this, it comes. There was Sultan Mehmet of modern day Istanbul. Okay, and so when they came to conquer Istanbul, you know that they had chained the whole harbor and everything. And What he did was that he actually dragged all those ships over land and took it past those chains. So the thing that I'm trying to say is that if the government tries to, lock in something, people will find an alternate way. And so you just have to, if you're transparent, if you're open, I think everyone does, benefit from that. So I think our mindset should not be to, limit things. Our mindset should be how to facilitate things. And bring it under whatever the legal is, because it does increase your taxation. It does increase your ability to transact. So I think there are a lot of benefits for it. So I think everything has a bad side, but I think this benefits outweigh.
I would not invest in crypto at the moment, but I do understand the need for regulation. I did a story on crypto scams, and I was horrified to find it was so easy to find people who had been scammed within the crypto. And I'm talking about very educated people, doctors, women. So I think because the potential for scams is everywhere. It's there in the stock market, it's there in the banking sector, it's there in crypto. But because there's a lack of awareness and because there's a lack of regulation, there's nothing you can do about a scam. So definitely it needs to be regulated. It will be regulated.
I think even in the stock market you have like volatility limits. Like if the stock market hit 5%, there's it gets halted. So those kind of, I mean, if you're in crypto and if your whole net worth goes down 20% in a day or in a few hours, I think that's a big setback. I think so those protectionist things are good unless they become over-regulated. Yeah.
In fact, the allure of crypto is that it is not regulated. It's just so easy to open a crypto account and just start trading. It's the gamification of it as well.
Absolutely.
Yeah. Great. So if I were to sum up the discussion that we had on two different levels, the rupee has not depreciated because there was that room in the market. SVP had been mopping up excess dollars, so that pressure had not come as yet. And going forward, if the ceasefire holds, given that our LNG imports have gone down, even with an increase in oil imports, if the remittances hold stable, I think the Tresmark's point of view is that over the next few months, the exchange will probably not depreciate that much, given these parameters. Having said that, it is also likely that the next MPC meeting, there is going to be a rate hike, and when that happens, that will obviously have changed the calculation a little bit. And the broader view, when the interest rates go up, some of the money from the PSX will flow away from the equities and towards fixed income, and then we'll see the usual, I think, redistribution of wealth. Gold is always a good investment in the long term, even if it has fallen down in the short run, and that crypto, one should keep an open mind about it.
Yeah.
That pretty much sums up the conversation.
Yes, absolutely. I think it's just a very dramatically changing world. I think everything that we would assume is being questioned. So I think our audience has to also just keep up with what's going on and be proactive in their strategy, especially when managing money, because it's crazy. I mean, I'll just tell you something, that I don't look at news of what's happening about the ceasefire. I just look at what's Brent trading at, what's gold trading at. If gold has gone up, I'm saying, okay, something good is happening. Brent is going up, I'm saying, oh, something bad is happening. So, it's just so interlinked. I mean, when you talk about quant traders, I think it's interesting. It's a very interesting world. They'll have 6 screens, okay? And because everything is interrelated. I mean, if I'm trading oil, I'm also looking at euro and how euro will behave, and I'll take my position in gold. Then I'm looking at weather derivatives, so what happens in the weather. So it's a very connected world, and finance sits in the middle of that. So it's interesting. I think people have to just be more proactive than they were before, because that was just a very isolated world.
And we have that information at our fingertips, so we can be proactive. But with the digitization, it's easier to shift money from one fixed income mutual fund to, say, an equity mutual fund, and vice versa, if you feel that is the need.
Yeah, absolutely. I mean, small things like using app to transfer money. I mean, I think imagine if there was no app to do that, the whole day I would be just writing checks.
Great.
Yeah.
I think this was a very interesting discussion. Thank you so much for coming on my show.
Thank you, Fatima, so much. I think I had a pleasure, talking about
The pleasure
all of
was
this.
all mine.
Thank you.
Great.